this next section's on the Reforestation Tax Incentives. These have gone through a major change as of October 22nd. And so we're still in the midst of getting the final guidance from the IRS on the law that was passed on October 22nd. So what we've done with this presentation is kind of combined showing the old stuff and the new stuff, because part of the new law is any reforestation activities done October 22nd or earlier is still eligible for the older rules, and anything October 23rd and beyond, the day after the law was signed, is under the new provisions. In the presentation that you got in your PowerPoint, it has 21st and 22nd are the 2 days. It's actually shifted up 1 day. We thought that the law pertained to the day it was signed, but it actually started the next day. So the old provisions are covered in the Ag Handbook that you all have there, and then got a revenue ruling, and then the Jobs Creation Act American Jobs Creation Act is actually what the law that was signed October 22nd was called. So the Reforestation Tax Incentives, these are incentives provided by the IRS in the Internal Revenue Code to reduce or eliminate the need to hold expenses that are associated with reforestation or afforestation in your capital account until you sell the timber or timber products. And as I just said, the American Jobs Creation Act changed the nature of these incentives. So for reforestation done October 22nd or earlier, you can take a 10% reforestation investment tax credit on an amortized write-off up to the $10,000 of qualifying expenses per year over 8 tax years. So for reforestation done on October 23rd or later for last year, you deduct outright the first $10,000 per year of qualifying expenses and then amortize any additional amount over the 8 tax years. So as with all of these, who is eligible? It's taxpayers, estates, partnerships, corporations are eligible for both the older tax credit and amortization provisions, but trusts are not eligible for either. And then for the new provisions, individual taxpayers, partnerships, and corporations are eligible for both the new deduction and amortization provisions, but estates are only eligible for the amortization, and trusts are still not eligible for either. So what qualifies? Reforestation on tracts that are at least 1 acre in size, located in the United States, held to produce commercial timber products, and again, this includes practices to encourage natural regeneration. In other presentations I've been in, Lloyd gets up and you don't have to plant a tree to qualify for these expenses. Scarification of the soil, burning, whatever type of, if you're actually doing this activity to encourage regeneration, those expenses involved can count. So reforestation expenses reimbursed under an approved public cost share program that you do not elect to exclude from your taxable income. And cost share expenses and how to get your excludable amounts is the next presentation. So until 2003, this was part of the revenue ruling update that was listed at the beginning. This always included CRP cost share payments because all CRP payments had to be included in gross income. But the revenue ruling 2003-59 is now you can exclude cost share payments from gross income as long as it's not the rental or incentive payments that under some parts of the CRP program. And then under the Internal Revenue Code, Section 175, you can deduct tree planting expenses paid using a CRP cost share to a limit of 25% of your income from farming. So what does not qualify for your reforestation? Christmas trees, shelter belts, windbreaks, nut trees, meaning you're growing for the nut, you're growing for walnuts or whatever. If you're growing walnut trees for the timber and you get walnuts as a side benefit that, that just grow because it's a walnut tree, it still counts as long as you're growing the walnut trees for the timber. Fruit trees and ornamentals. Now back to what qualifies. 1 acre, a land of forest that's 1 acre in size or larger. Shelter belts and windbreaks are here. If instead of planting this row of shelter belt, you have an acre wide, as Lloyd has said before, how wide is an acre? But, like 200 feet, 250 foot wide shelter belt that you have you have it for your length of whatever, and you grow your commercial timber in there, and that's the point of that 1 acre wide strip, at least an acre. But then a side benefit is it's providing a windbreak to the farmhouse, the fields, the whatever. So because you always need wood around the farm anyway, fence posts, other items. So you're actually growing this windbreak for commercial timber, and you state it as it's a commercial timber forest, but you're getting the benefit of the windbreak also. And then what does not qualify also is the reforestation expenses that are reimbursed under approved public cost share program that you elect to exclude from your taxable income, and the cost of intermediate treatments. So here's a summary of the older incentives for anything that was done before October 22nd or before 2004. First, there was a reforestation investment tax credit, and that equaled 10% of your qualifying reforestation or afforestation expenses up to $10,000 in a year. So your maximum, actual tax credit you could get was $1,000. And it was not a deduction. You actually get $1,000 reduction in your taxes or whatever. But part or all of the credit is subject to recapture if you dispose of the trees within 5 years. And if you dispose of the trees within the first full, you have to give it all, the tax credit back if you dispose of it within the first year. And then a 20% reduction, so 80% the second year, 60% the third year, until after the fifth year. Then it's just zero, you're not part of that. And there is an exception as if it's because of a transfer at death. So he takes the credit on Form 3468 Part 1, and then also for tax years beginning after 1997, any unused credit is carried back to the return for the preceding year, then forward to the returns for the next 20 years until it's used up. And for tax years beginning before 1998, any unused credit was carried back to returns for the 3 preceding years, then forward to returns for the next 15 years. So the tax credit goes on 3468 under Part 1, Line 3. It has the reforestation credit, so you put in the amount times the 10%, and so the example here is they put in the full $10,000 times the 10% to get the $1,000 tax credit for the reforestation. So continuing on with the older incentives, there was also the reforestation amortization part, and that was you can amortize any direct expenses incurred in establishing a stand of timber to a maximum of $10,000 per year, or $5,000 if you are married filing separately. And then you reduce the amount amortized by half for any reforestation investment tax credit that you took. The amortization period is nominally 84 months, 7 years, but a half-year convention applies. So this means that the first year that you claim it, you only claim a 14th of the amount, and then you get a 7th of the deduction for the next 6 years, years 2 through 7. And then in the 8th and final year, you take that last 14th, that was the other half of the 7th from the first year. And you can amortize reforestation expenses from 2 or more years at the same time. You just maintain a separate schedule for each event, and then report the amounts on Form 4562, Part 6, according to the instructions. So, any tax saved by amortization is again subject to recapture, but this time it's if it's disposed of within 10 years. Disposals by gifts are accepted. Like-kind exchanges, involuntary conversions, tax-free transfers, transfers of death are also generally accepted from being recaptured. Also, you must specifically elect to amortize reforestation expenses in a timely filed return for the tax year in which they are incurred, and make the election and report the amounts of deductions taken on Form 4562, Part 6. And you cannot make the election on an amended return, but once it is made, you can take amortization deductions that you have forgotten about. Back in the tax forms there was 4562 Part 6. So it was Part 6, and it was way down here at the bottom. Part 6 is amortization. And so you explain what you're amortizing, qualifying reforestation costs, the date, and the amortizable, I can't even say the word right, the amount that you're doing, and what code it's in. And this is what's always gotten me is 1/7 is 0.1, it's like 0.14 percentage-wise, and a 14th is like 0.7%, so, or it's the other way around. 1/7 is 14%, and the 14th year, or the 14th amount is 7%. But anyway, so that's your 14th of the amount, so you get a $679 for that 1/14th. You take the amortization deduction where you take it depends on how you hold your forest. If it's held as an investment, it's on Form 1040 under the adjustment to income line, and write in RFST, reforest, and the amount. If it's part of a trade or business, you report it on Schedule C, and the other expenses line, and explain on page 2. And if it's part of a farm, you report it on Schedule F under the other expenses line. So that was the summary of the older expenses. So now we go to the new incentives. The new incentives is you can deduct any direct expenses incurred establishing a stand of timber to a maximum of $10,000 per year, $5,000 again if you're married filing separately, and then amortize expenses over $10,000 per year as described above. So we lost the tax credit, or the tax credit was lost. I shouldn't say we. I don't own forest land. So a comparative example: say you reforested 80 acres last year at a cost of $175 per acre, or $14,000 in all. You received no cost share payment, so your total expense is more than $10,000. So calculate the reforestation incentives that you're eligible for. First thing that was here is, the first mistake the person made is they spent over $10,000. If you can plan it out and spend $10,000 in one year and then $10,000 in the next in a separate stand. So with the older incentives, the reforestation done October 22nd or earlier, when you're filling out the tax forms, you capitalize the amount over $10,000, and in this example that was $4,000 because it was $14,000 total. And then you can claim a tax credit of $1,000 on the $10,000 amount. And then the amortizable amount, you got the 14th, which was the $679, which was on the form that was on the overhead. And then for the next return years, for the next 6 years, you get $1,357 that you can amortize. And then the 8th year, you get that last 14th of the amount. So under the new incentives, for any reforestation done October 23rd and beyond, you deduct outright the first $10,000 of your expenses, and then beginning the write-off of your amortizable amount. Then for your returns for the next few years, you got the 1/7 of the amount, and then the 8th year you get the 14th again. So there's other reforestation strategies that would enable you to better utilize the reforestation incentives. For example, as I said before, you can divide the reforestation operation and expenses between 2 tax years, and you can also use excludable cost share payments to bring your direct expenses below $10,000. But remember, you should base your forest management decisions on what is on their full silviculture, financial, and planning implications, not just their tax effect. Is there any question on reforestation?